CFRA Research Chief Investment Strategist Sam Stovall has an S&P target of 5250. Joins us now. Can the market still rally even if we don't get rate cuts, Sam?
Good morning, Sarah. Yeah,
morning.
I think so. I think because one of the reasons that the 10-year yield is creeping higher, that the Fed is going to take its time, in a sense, be slower to lower interest rates, is because the economy is actually doing fairly well. And so as a result, I think there is, after we get through this much anticipated correction that history says is overdue, I think we do end up being higher by year end.
So built on the strength of earnings and the economy, is that good enough, or has that already been factored in?
Well, I think that we're expecting to see about a 9.1% gain in earnings this year, about a almost 14% gain in earnings next year. I think the real question is, how deep will a decline actually be? Our expectation is that we could see a decline anywhere from 8 to 11%. And that would be fairly consistent with history, would also imply that we reset the dials and that we have a better chance of moving higher as the year ends. So I think investors, if they want to take away one thing from my note that will be coming out, is essentially that don't let your emotions become your portfolio's worst enemy.
So you expect a garden variety correction, as you say, and then you'd be a buyer on that. In what group? Where's the leadership going to come from?
Well, the leadership or those groups that are likely to hold up the best are your traditional consumer staples, healthcare, utility kind of stocks. In particular, the three best performing groups during all corrections going back to 1990 were gold, were electric utilities, and also household products. So companies like Newmont Corporation, Next Era Energy, and Procter & Gamble would be companies that would likely hold up very well during the decline. But then traditionally, we rotate back into those that were beaten up the most. So I think we could end up seeing good returns come from communication services, financials, and technology by year end.
Okay, Sam. Thanks for the playbook. Appreciate it.